Hello everyone, I Zainab Tinwala welcome you again to my study channel. Today I am going to explain you all business services. The first business services, which is banking, from chapter number 4 of 12th standard HSC textbook, Organization of Commerce and Management. There are various types of banks. As you can see in the slide, there are types of banks like investment central bank, commercial bank, cooperative bank, development bank, exchange bank, regional rural bank, saving bank, investment bank, and specialized banks. So there are 9 types of banks, but these 9 types of banks perform various functions. So today in the next slide we'll see the various kinds of functions performed by the commercial banks. So basically commercial bank performs two functions, primary functions and secondary functions. In this video I'll be concentrating on the primary functions. So primary functions are again of two types, accepting deposit and granting loans and advances. Again, accepting deposits are divided into two types, that is time deposits and demand deposits. There are two types of time deposits like fixed deposit and recurring deposits. And demand deposits are also of two types, saving account and current account. If you see loans and advances, they are also loans are of three types, that is short term loans, medium term loans, and long term loans. And advances are three types, that is cash credit, overdraft, and discounting of bill of exchange. So let's begin with the first primary function, that of accepting deposit. So basically accepting deposit means um, it is the most important and primary function of the commercial banks. This commercial banks like Bank of India, then Union Bank of India, State Bank of India, Maharashtra banks, these are all types of commercial banks which accept deposits from the individual and the organizations. They accept deposit in several forms, like uh, we'll see in the types of deposit and which various types they are going to accept the deposit, that like they collect money from the individuals or any organization or business institution. They collect money. These deposits can be classified into two types, that is time deposit and demand deposits. So what is time deposits? Time deposits means they are repaid to the customer only after a specific period of time or after expiry of some specific time. Now that time deposits are divided into fixed deposit and recurring deposits. So what are fixed deposits now? Fixed deposit account is an account where fixed amount is kept for a fixed period of time bearing fixed interest. Like if you are depositing 50,000 for 5 years with the rate of interest of 9%, okay, that is fixed deposit. The rate of interest is more as compared to saving account and various accounts like current account, recurring account. The rate of interest given on fixed deposit is more than the other accounts. Normally, withdrawal of amount is not permitted before maturity date. However, depositor can withdraw amount before maturity date, for which bank will reduce the rate of interest. For amount deposited in this account, a fixed deposit receipt is issued by the bank. Against this receipt, loan can be taken from the bank. So if any problem is there, any problem arises and you want to withdraw the cash, you want to break your FD receipt, so at that time bank permits you to take the money, but the rate of interest given to you, if it is for 9%, they'll reduce the rate of interest and then give you the amount which you have kept as fixed deposit. Even you can get a loan on this fixed deposits. Like if your fixed deposit is for 5 years and in between you want to take some loan, you can take your loan for a certain amount from the bank. Now as you can see in the figure, This is the fixed deposit receipt, where you can see the name of the bank is given, the amount is given, then the name of the customer, the age of the customer is given, other bank details are there, the date is there, the date at which the FD receipt is made, and the date of maturity is mentioned, the amount which is being paid, like 5 lakhs is the amount on which the FD is taken, and after maturity how much will the account holder get, that is also mentioned. Age is to be mentioned because for senior citizens the rate of interest is more. See here, as normally uh, uh, citizens get suppose 8%, and if it is a senior citizen they get 1% or 0.5% more than the normal rate. Next is recurring deposit. Now it is operated by salaried person and businessman having regular income. A certain fixed amount of money is deposited into the account every month. Withdrawal of accumulated amount along with interest is paid after the maturity date. Rate of interest is higher, which is similar to fixed deposit account. Separate passbook is provided to know the position of RT account. So here basically the fixed deposit and recurring deposits are somewhat similar, but in fixed deposit you have to deposit a lump sum amount at a particular on at a one time only, but in recurring deposit each and every month a certain amount will be deducted from your saving account and will be debited in your recurring deposit, that amount which is being the instructed by the customer to the bank. That's why it is said that it is operated by salaried person, because the salaried person knows that he has got fixed income, like every month if he's getting a salary of 15,000, out of 50,000 15,000 he can deposit 5,000 in the recurring deposits, and that can be kept for a year, 2 years, and accordingly interest is received on that amount. And here you there is no receipt given, but instead of it a passbook is maintained where all the details, every month how much money is being deducted from your account, how much interest you will be receiving, for how many months it will go on, everything will be mentioned in that passbook. And here also in from this recurring deposit, if you want to break the deposit and withdraw the money, it is possible. This is a form where you want to open an account regarding a fixed deposit account. It's you have to fill this kind of form given by the banks. This is an example of it. This is the recurring deposit receipt. Now this is the distinguish between fixed deposit and recurring deposit, where in fixed deposit fixed sum you have to give, and regularly you have to deposit the money. Here you received FD receipt, here you have a passbook. It is fixed deposit suitable for all the person who has cash. Okay, and here it is suitable for fixed income group. The rate of interest is higher than recurring deposit, and the rate of interest is lower than fixed deposit. Next we will go to demand deposits. Now demand deposits are those which are repaid to the customer whenever they are demanded. Like if you saw time deposit, they can be given only after a particular time, but in demand deposit whenever the customer demands, the bank has to pay the customer their money. That means money can be withdrawn as per the wish of the customer through withdrawal slips, checks, ATM cards, online transfer, etc. Demand deposits are again of two types, that is saving account and current account. Many of you all might be aware of this. So let's see what is saving account. Saving account, it is generally operated by those who earn regular or fixed income such as salary or wages. The main aim of this deposit account is to encourage habit of saving among people. These deposit accounts are meant for the purpose of maximum savings. There are restrictions on the withdrawal limits from these accounts. These accounts carry low interest rate. Interest is credited monthly, quarterly, half yearly and yearly basis on the account. Passbook facility, balance on SMS, account statement, etc. facilities are provided to account holders to ascertain financial position. Now, this saving account also has some other facilities like Flexi Deposit. For saving account holders, some banks provide separate facility of Flexi Deposit. This facility combines advantages of saving account and fixed deposit account. This is not separate deposit account. It is a type of saving bank account or current deposit account with special feature and benefits. It's like some balance you have to maintain in the saving account. If your balance goes above that, automatically that amount will be transferred to a fixed deposit account. Okay, that instructions has to be given to the customer has to give to the bank. Next is saving account multiple options deposit accounts. Now in this multiple option deposit accounts, what happens, again the excess amount after a particular amount gets automatically transferred to the fixed deposit. But if the balance goes down in the saving account and the person has given somebody a check and needs more money, again from the fixed deposit account the money will be transferred to your saving account. So there is flexibility. Again, some on that FD risk, the amount which gets transferred to the FD account, you will get more interest, and the money on the saving account, the money kept in the saving account, you will get less interest. Okay. Next is current account. This account is basically operated by businessmen, as there are no restrictions on the deposits and no restrictions on withdrawal. Main important thing, in this current account you get overdraft facility, but interest is not paid. No interest is paid in this account. For saving account, some interest is given. For fixed deposit accounts, some interest is given. Recurring account, you get some interest, but in current account you do not get any kind of interest, zero interest. Okay, but here you get an overdraft facility. For current account, bank provides statement of account every month, and here you can withdraw the money with checks. So here is the distinguish between saving account and current account. Saving account, all individuals. Here current account is operated only by businessmen. Saving account, low interest is given. Current account, no interest. Say in saving account you have limitations on withdrawal, like you have 10,000 or 30,000 you can withdraw in a day, but in current account you may withdraw how much ever amount you want. Saving account does not provide overdraft facility. Current account provides overdraft facility. Saving account, you can withdraw money by checks, withdrawal slip, and ATM card. In current account, only checks, with checks you can withdraw the money. Now with this we finished um, first primary function. Now next we will move on to the second primary function, which is granting loans and advances. So bank grants loans means once you, first is accepting deposit, means the bank collects money from the customers. Now the second thing is bank even gives the customers money. Either they give it through loans or they give advances. So banks grant loans and advances to business firms and others who are in need of bank funds. The loans are provided for a longer period of time, from 1 year and more. Advances are provided for a shorter period, from 4 months to a year. The advances are in form of cash credit, overdraft, discounting of bills, etc. Now let's see which type of loans are there. Basically, this commercial banks provides loan to businessmen and others. So again, they are of, and interest is charged on this amount sanctioned. The loans are as follows. First, short-term loans for a period up to 1 year. Second, medium-term loans, which is a period of 1 year to 5 years, and long-term loans are for more than 5 years. Like you see, housing loans are taken for long-term period. Then if you take two-wheeler loan or four-wheeler loan, that is medium term loans. And if you take gold loan, it is either for a year. It's like, now next we'll see what are the types of advances. So advances are small term funds provided to businessmen to satisfy different financial requirements. Cash credit. First is cash credit. The cash credit advances are provided to current account and saving account holders. Like if you have a credit card, so that is called as cash credit. It means in spite of having no money in the account, you can use your credit card. The bank pays on behalf of you, and then after a certain period of time, you have to pay that amount to bank. If you are not able to pay that amount, certain interest is being taken from the customers. Okay, so it provides working capital for a longer period of time. Interest rate is higher on cash credit. Separate cash credit account has to be maintained by the borrower. Next is overdraft. Now, as we had already seen, the current account holder receives this overdraft facility. So this overdraft facility is also helps the businessman to meet the working capital of his business. Okay, the period can vary from 15 to 60 days. Interest is charged on the actual amount withdrawal, as if like if I have taken overdraft facility of 50,000 from the bank, but I don't need that 50,000, I need only 10 to 20,000, so interest will be charged only on that amount which I have withdrawn. Only on the 20,000 rupees which I have taken as overdraft, I'll be like, the businessman will have to pay interest. And no separate book is to be maintained for this. It is a temporary arrangement for a shorter period of time. Next and the last advances is discounting of bills of exchange. The drawer of bills of exchange or beneficiary can discount the bill with the bank and obtain an advance. On the due date of bill, the bank will recover the amount from the drawing. So whatever bill is there, if your the third party has promised you to pay that bill amount on a certain period of time, which is a longer period of time, but you are in need of money right now, so you can go to your bank and get the money bill. You can get the bill exchanged with money, and the bank will recover that amount of the bill from the third party when it gets matured. Okay, so here we have a distinguish between loan and overdraft. Loan, all account holders will get, and overdraft is only uh, given to current account holder. The rate of interest is lower than overdraft. The rate of interest is higher for than loan. Loan is for a longer period. Overdraft is for shorter period. Loan, the interest rates on the amount sanctioned. Like if I have taken loan of 20 lakhs, so on 20 lakhs I'll have to pay the interest. But in overdraft, as I have already explained, that whatever amount I withdraw, I use, only on that much actual amount I'll be paying interest. The amount of loan is larger, the amount of overdraft is smaller. Separate account is to be maintained. For overdraft, no separate account is to be maintained. Okay, thank you very much. See you all in my next video. Till then, take care. Goodbye.